Hi, everyone. I am going to show you another homework problem for financial accounting. This is chapter 2. So we're going to go in here and look at chapter two's homework, and I'm going to work on Elite Realty. So basically, Elite Realty acts as an agent in buying, selling, and renting and managing real estate. And we see the unadjusted trial balance right here. Then it goes on and tells us some transactions that happened during the period and wants us to enter some items. But the first thing we need to do is take the unadjusted or the trial balance, record the April 1st balance of each account in the appropriate balance column of a four-column account. Type balance in each item. So that's the first thing we're going to do right now is just go through and take those initial balances and place them in the each account. So the first thing we're going to look at is cash has a balance of 26,300. So we're going to go to the general ledger cash and we're going to show the date, April 1st, 25, or whatever the date was. I'm so sorry. And I'm going to show balance, and we're going to, I forget already what the amount was, 20. Um, sorry, guys, 26.3. We're going to show this as 26,300. Okay, so we have the cash balance there. The next one we're going to do is we'll go to the accounts receivable of 61,500. So we'll go back to accounts receivable 61,500. Um, I will find, sorry guys, general ledger. I want to go to accounts receivable 61,500. So I'm going to put this one April 1st, and I'll show balance 61,500. And you see I'm putting these assets as a debit balance, okay? Next one, prepaid insurance, 3,000. So I'm going to go down here where there's prepaid insurance. Again, I'm going to show April 1st, April 1st, and I think I said 3,000. And then office supplies, 1,800. Go back to office supplies, April 1st, balance. Boy, my head is not right today. I can't even, 1,800. Okay, so we'll have 1,800 in here. Then the next is accounts payable. That is a liability with a credit balance, 14,000. Credit balance, 14,000. And this is April 1st. Then we've got uh, Alberto Harnish Capital, 46,000. So we'll go into Alberto Harnish Capital and we'll show April 1st, 25 balance, 46,000. Then we've got Alberto Harnish Drawing, 2,000. Alberto Harnish Drawing, 2,000, that is a debit balance. Then we've got fees earned of 240,000. Fees earned, balance, 240,000. Remember, that is a credit balance. Then we've got salary and commission expense, 148,2. Salary and commission expense, that's a debit balance, April 1st. Then we have rent expense of 30,000. Debit balance. Then we have, whoops, um, advertising expense of 17,800. Advertising expense, 17,800. Then automobile expense of 5,500. Automobile expense. And then I think our last one is miscellaneous expense of 3,900. Miscellaneous expense. So what I'm doing, guys, I'm toggling back and forth between the instructions where I'm taking this unadjusted trial balance, I'm taking all of these figures, and I'm going to my general ledger. And in the general ledger, we have a list of these accounts. When you want to go to the cash, you click on it. And all I did is I tried to take and put the initial balance for April 1st in this balance section. And if it was a debit, meaning if it's assets, or if it's expenses, or if it's drawing, I put it in the debit. If it is revenues or liabilities or owners or owner's capital, I'll put it in the credit section. So we'll do that with each one of these. I should put in the word balance. I just did bow. So I'll make sure I go back in for each one of these and put the word balance in. Okay? So that is the first step we do for each of um, these accounts, okay, in the general ledger. So once that is done, this should be April 1st, not April. Each one of these should be April 1st. It doesn't like the BAL, it wants balance. Okay? So we'll do that for each one of these that we're aware of. And again, I'll go back and fix that BAL to balance on all of them. Okay, the next step we're going to do in the instructions, as we move down, the following business transactions were completed. What they want us to do is journalize the transactions for April in a two-column journal beginning on page 18. So here's our journal. We'll start with page 18. You see how you have a page 19 and page 18. And we are going to journalize those transactions. So let's look here. The first one is April 1st. We paid rent on an office for the month, $6,500. So we will show April 1st, 2025. We will show we paid rent, 6,500, and we will show cash, 6,500. Okay? Got what we're doing here? Rent expense. Didn't like that. Okay? So that is the first journal entry we will do. And let's see if I can say paid rent on the office building for April. Maybe I'm not supposed to do that. I thought I would. Let me see here. Well, I guess I do not need to make an explanation. So if I go to the next one, April 2nd, purchased office supplies on account for 2,300. Well, I'm going to go here, April 2nd. Purchased office supplies on account. So what that means is we did not pay cash yet. We owe the money. So office or supplies for 2,300. Or maybe I need to call it office supplies. Yep. And that's 2,300. And then I'm going to say accounts payable, 2,300. Okay. The next one is April 5th, paid annual insurance premiums of 6,000. April 5th, annual prepaid insurance, 6,000. And that is cash of 6,000. Okay. The next one is we received cash from clients on account of 52,300. So that means we did work for clients. We completed the revenue and they were to pay us at another time. So when we did the service, we debited an accounts receivable, we credited revenue. Now they're telling us we received cash from clients on account, which means we were going to receive that money that was due us. So we're going to show we brought in the 52,300. So we will show on April 10th cash 52,300, and we will credit accounts receivable. Now think about this. We credit an asset when it goes down. Accounts receivable is an asset and it has a debit balance. The reason this goes down is they gave us the money so we no longer are going to receive this 52,300. Next, we purchased land for a future building site for 200,000. We paid 30,000 in cash and gave a note payable for the remainder. So on April 15th, we have land for 200,000. We gave cash of 30,000, but the difference is going to be a note payable. I guess notes payable. And that difference would be 170,000. Okay? I hope that's making sense to you guys. Next, we paid creditors on account $6,450. So on April 17th, we paid creditors on account, accounts payable, and we're doing accounts payable because we don't owe that money anymore since we've just paid it. And that amount is $6,450. $6,450 and cash $6,450. Next, we returned a portion of the office supplies purchased on April 2nd, receiving full credit for their cost of $325. So, guys, we purchased some office supplies, but we're returning some. So on April 20th, we're returning $325 worth. So April 20th, think about this. We were going to owe them for the full amount. We're returning some so we can reduce our accounts payable by $325 because we don't owe that money anymore since we returned it. So we debit our accounts payable to reduce that accounts payable, and then we credit our office supplies for that same amount. Next, we paid advertising expense for $4,300. And this date is on April 23rd. So April 23rd, advertising expense, 4,300. And we have a credit to cash for $4,300. Again, you can check your work just to make sure we have done everything. All transactions must be entered except for post references before you receive. Check my work. So identify which accounts are affected by in each transaction. Keep in mind, every transaction involves at least two accounts. Okay, so we've done that portion. Um, Again, what's showing here is rent expense. When we debit it, it reduces our owner's equity. When we have office supplies, that increases our asset. When we have an accounts payable increase, that increases our liabilities. Okay, so we have that portion done. The next thing it asks us is enter the following transactions on page 19. So journalize the transactions on 18. Okay, next I need to then post to the ledger, extending the account balance to the appropriate balance column after each posting. So we're going to take these transactions we've just completed and we're going to post them to the general ledger. So on April 1st, we have rent expense of $6,500. So I'm going to go to the general ledger. I'm going to go find rent expense and I'm going to rent expense. Doesn't like that BAL. I will fix that. Okay. So let's go down here for rent expense. And on April 1st, we are going to show 6,500, and we're going to carry this balance forward 36,500. And the reference here, if we go to the general journal, that is going to be April 1st. And here I'm going to show the reference. This rent expense is account 52. So I'm going to show 52 goes there. And rent expense 6,500. That should be, I guess, sufficient. I might be screwing up, guys, with the post reference, but for now, that's what I'm going to do. Okay. The next portion I need to do here is show a post to the cash account of 6,500. So I'm going to go over to the cash account and I'm going to show April 1st, 6,500. And this is a credit here of 6,500. So I am going to change this up. I'm going to show my credit for this transaction. And I started with 26,300. Once I put in this $6,500 credit, I'm going to have a new balance. My new balance of 26,300 minus the 6,500 is a new balance of 19,800. Okay, let's just make sure that's doing what I want it to do. I'm needing to put in April 1st cash 6,500. Let me just see what I'm not doing right. Rent. Well, there's something I'm missing here, and I'll figure out what I'm doing. But let's just move on. So then the next thing we're going to do is on April 2nd, we purchased office supplies on account. So here we've got, oh, I need to put in my cash account. This cash account is 11. So I will cross-reference the 11 here. Okay. Next, we'll post this April 2nd journal entry. April 2nd, office supplies was debited 2,300. So I will go to the account office supplies on April 2nd, and I will debit 2,300 and come up with a new balance of 4,100. Okay. 23. We had a balance here of 1,800. Okay. So that is the one side. The other portion is a credit to accounts payable for 2,300. Now the office supplies account is 14. So I'm going to put that in here. The accounts payable on April 2nd is a credit of 2,300. So accounts payable April 2nd, 2,300. And I have a new balance, 16,300. Okay. Next, I have, over here, April 5th, prepaid insurance of 6,000. So I'm going to go April 5th, prepaid insurance, April 5th of 6,000, and I have a new balance here of 9,000. Okay? And this account is account 13. So I'll make sure I put 13 in here. I know I'm missing some things here and I'll go back and fill them in here. April 5th cash is 6,000. So I'm going to go back up here to my cash and show April 5th, 6,000. And now this brings this balance down to 13,800. Okay. As we move on to the journal, we've got April 10th, cash of 52,300 will post. So we'll go April 10th, 52,300. And our new balance here would be 66,100. Okay. And the other accounts receivable would be 52,300. So we'll go to our accounts receivable and show on April 10th, 52,300, which would be 1138, 1138. Nope, 52.3. What am I doing wrong here? 61.5 plus 52.3, 113.8. Well, that's it, 52.5. Let me make sure. Cash, 52.3. Oh, what was I doing wrong? Sorry, guys. Cash went up 52.3. The accounts receivable of 52.3 is a credit because we received the money and now we don't get that money anymore. So our 61.5 minus our 52.3 is a new balance of 9,200. Okay. So I'm going to continue on. And as I continue on with these various accounts, posting these, I will take our land of 200,000 on April 15th. I'll go find the land. April 15th. And that is 200,000. And that was for 30,000 cash, 170,000 notes payable. So I'll do April 15th, 30,000 cash. We're down to 36.1. And then notes payable, April 15th. And this is a credit, 170,000. And our notes payable is number 23. So I will show 23 here. Our cash is 11. I'm just showing the different accounts here. And so I'm just continuing on posting all of these transactions. Okay. We've got one for accounts payable of 6450 and cash of 6450. This date is April 17th. Accounts payable, April 17th, 6450. My new balance here, 16,300 minus the 6450 is 9850. Did I put that in the wrong spot? Uh, 9850. Oh, yep, 9850. That was correct. And then the cash goes down by 60, 450 on April 17th. So I'll go to cash, April 17th, 6450. My cash goes down 36,100 minus my 6450 is 29,650. Okay. Then we've got accounts payable April 20th, accounts payable 325. So I'll go back to my accounts payable April 20th. I'm debiting the 325 because I no longer owe that amount. So my 9850 minus my 325. 9850 minus my 325 would give me 9524. What am I doing wrong? 9850. 9850 minus 325. 9525, not 9524. Are you guys feeling better that you're seeing me screw up? And then I am going to remove office supplies of $325. So I will go up to the asset, office supplies, and credit that on, is it April 20th? Of $325, 4,100 minus the 325, 3775. Okay. Then we've got advertising expense of 4,300. Go to, and this date is April 23rd. Advertising expense 4,300. April 23rd, 4,300. I'll come up with a new balance here. The 17,800 plus the 4,300 is 22,100. And I will reduce my cash by 4,300. Um, reduce my cash by 4,300. So this would bring this down to 25 350. And then as I continue on, I guess I've done all those journal entries in here. Okay, so let's go back to the instructions. And now it wants me to journalize the transactions for April, post to the ledger, extending the account balances to the appropriate. Now I'm supposed to um, enter the following transactions on page 19. So I guess I should keep on with this page 19. So on page 19 of the general journal, I will continue on April 27th, we discovered an error in computing a commission. Received cash from the salesperson for the overpayment of 2,500. So discovered an error April 27th, 2,500 was a commission uh, error. So April 27th, we'll go back here to page 19 and we'll show here April 27th, we received cash of 2,500. And let's see what commissions, salaries expense. Let's see. Salaries and commissions expense is what we will credit. Salaries and commissions. Salary and commission expense, 2,500. Next, we've got April 28th paid automobile expense of 1,500. So April 28th, automobile expense, and that was 1,500. And then we'll credit our cash for 1,500. Next, we've got paid miscellaneous expenses for 1,400, April 29th. Miscellaneous expense, 1,400, and cash, 1,400. Then we've got recorded revenues earned and billed to clients during the month, 57,000. This is April 30th. We have accounts receivable. And that was for 57,000. And we've got, let's see what the revenue would be, fees earned. 57,000. Then we have paid salaries and commissions for the month, 11,900. April 30th, salary and commission expense of 11,900. And we will credit this cash, 11,900. Then we've got withdrew cash for personal use, 4,000. April 30th. We will have the drawing account to be Alberto Harnish drawing of 4,000. Alberto Harnish drawing 4,000. And we'll credit our cash for 4,000. Then we have rented land purchased on April 15th to local merchants association to use as a parking lot in May and June during the street rebuilding, received advance payment of 10,000. So rented land and purchased on April 15th. They're going to use it in May. They're giving us the money up front. So remember, we haven't earned that money yet. So we're going to show this as cash of 10,000, and we're going to show this as unearned. Let me just make sure I'm saying it right. It's a liable unearned rent. So we'll show unearned rent of 10,000. Okay? So we will go through these and we will post those too. So I will go back on this page. I should have probably um, prepared journal entries for them all, posted them all, but I didn't. So on April 27th, we're going to debit our cash of 2,500. April 27th, cash of 2,500. And this increases this amount to 27,850. Okay. On the other side, we'll credit our salary and commission expense for 2,500. So we'll go find our salary and commission expense, April 27th of 2,500, and this lowers this account 148.2 minus the 2,500. It's 145.7. Okay. Again, we'll go automobile expense 1,500. This is April 28th. Automobile expense 1,500. April 28th. And this is bringing this up to 7,000. And we credit our cash for 1,500 on April 28th. And our cash now goes from 27,850 to 26,350. Okay. Then we show the miscellaneous expense of 1,400 on April 29th. Miscellaneous expense of 1,400. Excuse me, not there. April 29th, 1,400. And this is going to bring this up to 5,300. Oops. And we credit the 1,400 in cash. So again, it's kind of tedious here, guys, but you're doing it 26,350 minus the 1,400 is 24,950. Okay. Then we've got um, accounts receivable, a debit of 57,000, fees earned 57,000 on April 30th. So accounts receivable, 57,000. And that number is going to go up to 66.2. And we'll debit our revenues for 57,000, April 30th. So our 240,000 plus our 57,000 gives us 297,000. Okay. And then we've got our salaries and commission expense of 11,900. We'll show April 30th. So the 145,700 plus the 11,900 is 157,600. And cash 11,900. So we're reducing our cash. Again, our 24,950 minus the 11,900 brings it down to 13,050. And then we've got two more. The drawing, a debit of 4,000, a credit to cash of 4,000. We'll find the drawing account. And on April 30th, we'll show a balance, a debit of 4,000. This brings the new balance to 6. And our cash goes down 4,000. So this is 13,050 minus the 4 is 9,050. And then one more, cash and unearned rent. So we have cash of April 30th of 10,000 gives our new balance of 19,050. And then we have our unearned rent, which is a liability, April 30th. And this is 10,000. Okay. So we've posted all of these to the various accounts. Now, once we've done that, we're going to prepare an unadjusted trial balance as of April 30th. The way we're going to do that, we are going to take this general ledger and we are just going to come up with these balances. So cash is 19,050. So we will go and find the unadjusted balance and show 19,050. We will then show accounts receivable of 66.2. We will show prepaid insurance of 9,000. See what I'm doing? These are all assets, so they will all be debited. Office supplies will be a balance of 37.75. Um, then our land will be a balance of 200,000. Our accounts payable is now a credit balance. It's a liability. So that's going to be 9,525. The unearned rent is a balance of 10,000. The notes payable should be a balance of 170,000. The Alberto Harnish capital is a balance of 46,000. The drawing is a debit balance of 6,000. I remember correctly. Yep. The fees earned is a balance of 297,000. The salaries and commission expense is a balance of 157,600. And remember, all expenses are debits. The rent expense is a balance of 36,500. The advertising expense is a balance of 7,000. The automobile expense is a balance of 7,000. Make sure I did that right. Automobile is 7,000 and advertising is also 7,000. No, I had the advertising wrong, guys. The advertising is 22,1, 22,1, and the automobile is 7,000, and then the miscellaneous expense is 5,300. So hopefully we will have our balances correct. So on this one, our debits should equal our credits here. We've got 19,050 as a debit in cash, 66,2 for accounts receivable, 9,000 in prepaid insurance, 37.75 in office supplies, 200,000 in land, 6,000 in Alberto drawing, 157.6 for salaries and commission, 36.5 for rent, 22.1 for advertising, 7,000 for automobile, and 5,300 for miscellaneous, 532, 525. Hopefully that will balance. Yay. Um, so that has provided us with our unadjusted trial balance. Now it tells us, assume that the April 30th transaction for salaries and commissions should have been 19,100. Why did the unadjusted trial balance in for balance? Well, guys, just because we didn't input the right amount, as long as our debits and our credits are the same, we're going to be fine. So we're going to go back and and journalize the correcting entry on April 30th. You will not be required to post this entry to the ledger at this time. So basically, what they're telling us is the salaries and commissions should have been 19.1. What did we say they were? 11.9. Well, what is that difference? Well, 19.1 instead of 11.9 means we were off $7,200. So if we went to page 20, where is page 20? Uh, uh, should be in an adjusting journal entry. And I am so sorry, but I am trying to understand where I'm supposed to post that. Let me just try that again. Final instructions. Why did the journalize the correcting entry on April 30th? Use page 20. You'll not be required to post this. Uh, Questions not attempted. Oh, here's page 20. So I'm going to, on April 30th, show that that salaries expense should have, in fact, instead of 11.9, it was 19.1. So we should have a salary and commission expense of an additional 7,200, and we would credit our cash of 7,200. Does that make sense? So I know I am missing some my unadjusted trial balance is correct. I know in my general ledger is where I'm missing some points because I need to, in this section, I need to see what they want me to put in. Um, do I show the dates already in there? Do they want me to show um, the I have to figure that one out, guys, real quick, and I will get back to you on that. But basically, um, that is the gist, apart from what I am not putting into in this section. I feel like I need to be adding something here. For the most part, this is the way that you flow all the information together. So I hope that's helpful.